I think we're just gonna get started. Hey everyone, my name is Claire Pritchard. I'm the Marketing Project Manager with JCG. Today we're teaming up with Stephanie Dunn. Stephanie is the SBA President for Incredible Bank, where they lend to small businesses across the nation. She was responsible for building the national department, which is now ranking in the top 2% in volume of all banks in the country within the first 12 months of national SBA operation. Stephanie has over 20 years of experience in the financial world, and she's funded over $150 million in SBA 7A loans annually over 15 years. So we're incredibly excited and thankful to have her here to speak with us today. We've also got Nelson, familiar face here, representing JCG. He works with firms to exceed both internal and external customer experience expectations and really maximizing firms' financial performance. So this is going to be a great little chat. A few housekeeping announcements before we get started. If you have questions, feel free, type them into the Q&A box at the bottom of your control panel, and we will be sure to make sure we're answering all of those questions at the end. So without further ado, I'm going to turn it over to Nelson and Stephanie.
Thank you, Claire. Well, welcome everybody. Prior to the beginning of this webinar, I was visiting a little bit with Stephanie, and she was sharing with me that of all the loans that she's processed, which are an incredible volume here within the last few weeks, about 80% are funeral related, funeral home owners, funeral home companies. And for that part, that's especially why we've had a long relationship with Stephanie, and it's great to have her, because not only does she understand the SBA process, but she understands it in a funeral service cemetery world. So is there any kind of immediate thoughts that you'd like to share with everybody? There's so much changing that it probably is just a brief introductory comments from you, Stephanie, just to kind of set the stage.
No, well, thank you very much for having me. I'm thrilled that we're able to do this. I think it's so important for us to maintain our communication lines and keep in touch on a regular basis, because as you just said, the program has been constantly in flux and changing. So the basic principle of the program has remained the same. However, it's important to stay up to date on the details as the program morphs and expands, and now we're in round 2 of this PPP. So it's important to make sure you're always informed of the latest information.
Great. So again, for everybody that's on the line, we've had, I think, probably 150 registrants already and some questions already pouring in. So I'm going to go right to those questions, but I encourage each and every one of you to continue to send in questions. And I promise you, if you include your information on how to contact you, if we don't get to one of your questions online, between Stephanie and myself, we certainly will follow up with any questions that we're unable to cover. So first, out of the gate, Stephanie, we've talked so much about PPP loans here in the last few weeks. It's the free money, so to speak. That's already, we've had one round come and go. Is there anything that, there's 2 stages here. Now we've got people that are applying for the second round of PPP, and it won't be that much longer before people are preparing for the forgiveness stage, that we actually implement the part where the money goes into a process by which it's forgiven. Would you like to talk about that just a little bit, of what those 2 stages are, the application for the second round, if that's changed, and then also for people to start prepping for the forgiveness portion?
Sure, yeah, and that is really important. So you're right, when the program first launched, everyone was in need of relief, hence why the government came out with this program. So we all needed relief for payroll and then other expenses, but the government's true purpose for this program is payroll relief, hence why they called it the PPP loan, payroll relief loan. So the intended use of this is payroll. So truly, now that the first round of money went very quickly, the first appropriation ran out within, I think, 4 or 5 days. And then now we're in round 2. So there was a second round of appropriation to fund additional business owners that didn't make it in the first round because they were not able to submit their docs in time, or their banks didn't get them in the queue in time. So we're in round 2 now. So you have to really think about this PPP loan as a payroll Band-Aid. And so it in essence is 2 months of payroll relief only. So as a business owner, you really want to keep that in mind. And it's important, as Nelson mentioned, for the forgiveness portion to really track it and document and use it correctly and the way the program was intended to be used, which is for payroll. So just keep that in mind. You're going to want to keep it in a segregated account ideally, so you don't commingle it with your other funds, because your clock starts the day your PPP loan funds, and then from that day forward, you're going to want to use it for payroll and the other intended uses. And then in 8 weeks from the day you fund, you can apply for forgiveness with the bank, the same bank that funded that PPP loan. So twofold, it's really important to have a relationship with the bank that gave you the PPP money. And it's very important to keep in touch with that bank during the 8-week period, because come June, you're going to want to go back to that bank and ask for that loan to be forgiven. And that bank is the bank that has the delegated authority to approve that forgiveness.
That's works into the next question I had specifically. We've got a long history with you, and so there's a great deal of comfort just working with you on a daily basis, because we know the kind of person you are and how you'll move through the process. In the same token, funeral directors out there all over the country, they've got a relationship with their local bank, and they may want to seek that bank out for help, but not everyone is qualified, correct?
Correct, yes. So you certainly want to start with the bank you have the relationship with first, because in the perfect world, that's the bank that has an interest in making sure you get your money as quickly as possible, because you're already a valued customer of theirs. But you have to also remember that in order to qualify for funding of this program as a bank, you have to already have the SBA preferred lender status. And so if your community bank or the bank that you bank with now does not have that preferred SBA status, which is called the PLP status, if they don't have PLP status, they won't be able to process this PPP loan for you. So you're going to have to find another SBA lender that has that preferred status to get this PPP loan.
With regards to the relief package, the CARES package that it's been referred to, there's more than just the PPP loan. That's the one, obviously, that's gotten all the attention. But there's other parts of it, and from what I understand, if you choose one, it might rule you out for being able to select another one or participate. Can you go into a little detail as to what all the different opportunities built into the CARES Act is?
So when the program launched, when coronavirus relief programs launched, they came out with 2 different programs. One was the Economic Injury Disaster Relief, so EIDL, and the second one was the PPP loan. And the EIDL disaster relief, you applied directly with the SBA. The SBA approved you, and the SBA funded you directly. And that included a certain portion of grant money that was forgiven. And what they came out with later was it was $1,000 per employee would be your grant money. And then you could also, above and beyond that, they would determine based on the financials that you uploaded to the SBA site, if they would also give you an additional appropriation for just an EIDL loan. So that program that was originally launched, unfortunately, in the last 48 hours, has now run out of funding. So if you don't already have a loan number, so if you in the last 2 weeks went to that SBA.gov site, entered your information, and they gave you a loan number, then if you're in that system, ideally and hopefully your funds have been appropriated, and so you're in. But if you did not receive a loan number from them, that now bucket is out of money. So that was Program A. Program B is the PPP loans that we're talking about here that banks have delegated authority to approve. There is still money left in the PPP program. As of yesterday, the information that was sent out to banks was that we had used up 90 billion of that new funding for round 2. So we still have about 100 and 110 billion left in PPP money. So if you have not already received your PPP loan, there's still time. A lot of people thought that it was too late and they didn't want to go through it because they figured the money had run out, but there is still time. However, it is still a race to hurry and get your information in, because you want to get your loan number. There's no telling when the government comes out and there is no warning, advance warning. They send us an email and within 5 seconds the system's shut down.
The SBA 7A, that's part of it too?
Yes, and so the 2 disaster reliefs are the EIDL and the PPP loan. So that is to help get our businesses through this 8-week period of Corona interruption. The regular SBA program, program that has existed for 30 years, that program is still alive and open and active. A lot of banks right now, unfortunately, are tied up with the PPP servicing, so they're not able or not even accepting applications for regular SBA loans. However, I think that there is a tremendous value in taking a look at what your current situation is, and if there's a need for a regular SBA loan. A regular SBA loan right now, through the CARES Act appropriation, they have allowed all existing SBA loans, anyone in the country who has an existing SBA loan from a previous transaction, the government is going to cover your next 6 months of principal and interest forgiven. And all new SBA loans that close between now and September 2020 will also have the first 6 months of the entire principal and interest paid for them by the government, forgiven. So right now, if you do not have an SBA loan, it is a good time to look and see if there's an opportunity there to refinance whatever current term debt you have. Or if you've ever thought about family succession, or you've ever thought about buying another firm, or you've ever thought about wanting to enhance your service offerings or increase your technology abilities right now, because that's a huge need, or purchase retorts or add on to your funeral home, now is a good time to take a look, because you'll have that 6 month of principal and interest and covered. So that program is also part of this relief. So it's interesting because we are spending a lot of time in the media talking about the PPP program and this payroll relief, which is very important, but everyone that owns a business knows payroll is one aspect of our expenses. We have a lot of other expenses, operating expenses and other expenses that we need to maintain our business. So you take the PPP loan and apply that to the payroll, but then seek a regular SBA loan for potential working capital, operating expenses, and like I said, the opportunity to refinance debt and have a 6 month payment made for you. So the 2 month Band-Aid plus the 6 month payments, you're looking at 8 months of potential aid during this, the next 12 months, which in my opinion is probably going to be the process for a small business owner once everyone's open and can leave the house.
And that's excellent advice. I know we've spoke to a lot of clients here in the last month or so, and especially conversations relative to cash flow. And not to be a henny penny about it, but you know, when we do come back to what our potential so-called normal is, it doesn't mean that families are going to be readily able to purchase or pay for the funerals that they will go back to arranging. On the SBA loan, obviously PPP is all about payroll. SBA, really anything and everything, right, can be used for that.
Right, exactly. So you'll use a regular SBA loan to refinance your debt, purchase equipment, enhance your service offerings, working capital that you might need for operating expenses. And you're correct, Nelson, like you said, as soon as everyone is allowed to leave the house, it's not going to be a flip of a switch where everyone's just back in public like we were 2 months ago. There will be a ramp up period. So we will need operating expense aid. And then it is probably very, very prudent to have excess liquidity in the event you need it. And now's the time to make sure you have that cushion versus waiting 2-3 months and then you need it and you're scrambling.
Again, back to what you were talking about, the 6-month forgiveness on that, I wanted to highlight that again, because I think a lot of times people almost feel like these are deals too good to be true. In fact, early on, I think that skepticism is probably what delayed people on applying for some of these loans, because they just couldn't believe that that was going to be the case. And I guess I've given people the advice, no matter what, get into the mix, get the money. Even if you didn't use it, it's the cheapest insurance you're ever going to buy, even if you had to give it back. I think you shared something with me yesterday on the PPP part. I know a lot of people are nervous about, well, if I don't follow the rules, or if something happens and I don't get all the qualifications in to get the forgiveness. You shared with me that if that does happen, if there is something that goes awry with that the interest on that PPP, I want to make sure you got a chance to share that with everybody.
Right, yeah, and even as a banker, we've had our guidance, but we still don't have complete guidance now on the forgiveness piece. And the guidance on even just approving these loans and funding these loans it trickled in from the government. So from our perspective, lending the money, and then from a business owner's perspective, borrowing the money, we need to just operate with the guidelines we have. And the guidelines we have today are, the government wants this PPP money to be used for payroll, because the government was flooded with unemployment applications, and they basically pushed it out to the private sector so that the banks across the country, were giving people the money they needed for payroll. And so that money should be used for payroll. And the definition that they give is during the covered period. So the covered period is the 8-week period from when you receive the money. If you use it for 75% of that money, if you use 75% of it to maintain your payroll, so you don't have to increase it, you just need to maintain the same payroll you had on the PPP application prior to February 15th. So if on February 14th, you had 5 employees, from the day you fund your PPP loan 8 weeks out, you just need to maintain those 5 employees. And then that's 75% of your money needs to go towards that. The other 25% of the money can be used for rent expense, a utilities expense, and interest on other mortgage obligations. And so if you use it that way, and we have a worksheet that we're going to send out, I believe, after this, if you just keep your accounting records and your payroll the way you submitted it with your application of those 5 employees, and then come June, you show this, you had 5 employees. It doesn't necessarily have to be the same 5 employees. Keep in mind, that was some questions that are coming up, because some employees don't want to come back, let's say, if you let them go. But if you had the 5 employees come June, and you use 75% of it for the payroll and the 25% for the rest, or if you used 100% of the money for payroll, if you do the math, that means you'll have 10 weeks of payroll relief. But in June, we can still approve your entire loan to be forgiven. So the loan amount is calculated based on your last 12 months payroll multiplied by 2.5. So they use 2.5, because that gives you the allocation for the 25% other. So if you use the 100% of your PPP loan for payroll only, then you'll have 10 weeks of payroll.
Again, if we look back to March 1st, seems like a lifetime ago, but people had plans for the future. People had designs for their businesses to grow. And I just wanted to reemphasize again that we talk about all of this related to relief packages and the CARES Act. But if you're forward thinking and you're looking beyond the next couple of months, or the plans that you had back the 1st of March, if they're still viable going forward, these monies are available for you to continue to do that and potentially have a better deal than you could have even possibly imagined a month and a half ago.
Right, and yeah, that's interesting as well. A month and a half ago, interest rates also were not where they are today. So we have really an opportunity for business owners that can be nimble and just maintain their operation right now and take advantage of the programs that are available right now, like this PPP loan and anyone who has received that disaster relief. But the regular SBA loan, you're going to use that money for everything other than payroll, which every business has other expenses other than payroll. And like Nelson said, the funeral industry is an industry that has been around for centuries and will continue to be around for centuries. And so use this opportunity to think about all of the plans that you had in March, but realize that today you can still proceed with those plans, get 6 months of payments forgiven, and interest rates are at a 30-year low with that money. So ballpark interest rate right now would be in the 5.25% on a 25-year amortization if there's real estate included, but most importantly, the 6 months no money. So in 2-3 years from now, if you want to refinance that debt, you certainly can. So you would have had, if in 2-3 years from now, you want to refinance back to a conventional loan, you certainly can do that.
Well, I tell you what, we've been trying to hit some high-level questions in order to, there's as many possibilities as there are people listening in on the phone. So let me go to some specific questions here, and you can begin to field those. First question, making sure that EIDL and PPP monies, they receive them both, are grants and not double dipping. Was it okay for them to get both?
Yes, when you apply for your PPP loan, there is a question on the application that asks, have you received an EIDL loan? And so that day that you signed your PPP application, if you already have received the EIDL money, you have to click yes. And you will use the PPP money to pay off the EIDL money. However, I would say 95% of the country had not yet received their EIDL when they applied for a PPP loan. So just always remember, PPP is for payroll, use it for payroll, and EIDL, use it for everything other than payroll. And the EIDL, there is a portion of that is the grant money. That's the $1,000 per employee grant money that is forgiven. If you received more than that, then it could be a loan that you were approved for, and you can look that up with your login that you received when you went to the SBA.gov website and applied for that EIDL loan. So yes, 2 different programs. EIDL is the grant money. PPP is a loan for payroll to be forgiven.
Next question deals with the salary cap, the $100,000 salary cap. We received PPP money and one of our employees could go over the $100,000 cap. If he does it hurt anything, or just that we don't get credit for any amount that goes beyond that?
So if you use that worksheet that we're going to send everyone, again, if you have 5 employees on February 14th, and then you maintain 5 employees on, they just look at that $100,000 cap in the calculation of your loan amount, and they cap it at $100,000. The forgiveness portion, as long as you maintain those 5 employees, you will be forgiven regardless of if you paid that employee $110,000. Because if it's 5 employees and 5 employees, your loan amount is forgiven. It doesn't have to do with the amount you paid your employees.
Okay, that's so easy to remember. If you got the money, you potentially have it all forgiven. Just follow the instructions. Okay.
If you have 5 people you paid then, and you pay 5 people the next 8 weeks, your loan is forgiven.
Okay. Here's a personal question, I guess. Of the loans that you have closed under PPP, what is the average loan amount?
I would say the average loan amount is between $30,000 and $50,000.
Okay.
2.5 times payroll, but it's the payroll people had. They look at the last 12 months, 2019, and they take the average of the last 12 months, 2019. And if you're a seasonal business, you can also say, I don't want to use the last 12 months. I just want to take the 8-week period prior to February 15th. You can do that as well. But in the funeral industry, about 99% of the loans we've funded have been just 2019, last 12 months payroll multiplied by 2.5, and that is about 30 to 50,000.
Great. As I'm scanning some of the questions, you've done an excellent job because I think you're answering some of them as they come about. Just again, to reiterate, somebody's asking about the 75% of the payroll. As long as they do that, 100% of it is forgiven. And then somebody else brought up the point that you did. If you're going to use it all on payroll, it actually extends out to 10 weeks. Mm-hmm. On a regular SBA loan, what is the interest rate?
And so on a regular SBA loan, you can borrow up to $5 million, and the interest rate is usually, it is based on prime plus a certain amount. And so ballpark average is about prime plus 2. Prime right now is 3.25, so ballpark would be 5.25 interest rate.
Okay. We clearly hit a nerve there on the 7A loan. So there's, maybe if you can just recap that again, there's a number of questions talking about the terms, and you talked about the interest rate and also the maximum amount that you can loan.
Mm-hmm. On a regular 7A loan, you can borrow up to $5 million. The uses can be for acquisition, refinance, partnership buyout, so succession planning, equipment purchase, working capital. And if those uses determine the term and amortization, if real estate's included, let's say it's an acquisition and you want to buy out the firm you had been thinking about buying out for years, and now's a good time to do it. So we look at the acquisition, and if real estate is included in this acquisition, is the real estate value component of the entire goodwill purchase more than 51% of the transaction? And if yes, then you get a 25-year term, 25-year amortization. If real estate is less than 51% of the total composition of what you're buying, then it's a 10-year term, 10-year amortization. So if you're applying for anything other than real estate, it's an automatic 10-year term. So if you just need a working capital loan, or if you only want to buy equipment, or if you just need a loan for inventory, that would be a 10-year loan, 10-year term. However, if you do it all, let's say you want to refinance your current conventional loan because you want the 6-month no payments. If you want to refinance your current conventional loan and you want to borrow $100,000 in working capital and you want to buy some technology equipment, if you do all of that in one loan and real estate is more than 51%, you get the whole loan on a 25-year term, 25-year amortization. So that's really beneficial if you want to do a couple of little things and refinance that real estate. You'll get the benefit of buying equipment over 25 years and getting working capital over 25 years. So the cash flow for you, your payments will be a fraction of what they would be if you just got a working capital loan.
I just want to do another little commercial here for you, Stephanie, because I think the wealth of information and knowledge that you have, 20 years of doing this with funeral service, I would encourage anyone just to run ideas or get ideas from you. It isn't just a dollar amount and whatever else, but how you apply it and the appropriate way to do it to maximize those dollars. Again, I can't begin to stress that to people enough. As Stephanie said before, use the people in your life that you trust, if that's your local banker. But if you're looking for somebody that has insight in funeral service, you can't do much better than Stephanie. Here's one that is, again, kind of rolls into that, unique from the standpoint of funeral service. So for those that applied for PPP and they were using their 12-month rolling average on payroll, but now they've got services that aren't anywhere close to what they were probably providing before. So you go from having traditional funeral services to maybe graveside or direct cremation. A lot of their people, their part-time staff especially, aren't coming into work, whether by choice or they don't need them. So at the end of this, what do they do with money that they may have had over? Can they pay that out to employees? What is the appropriate manner in which those funds should be distributed to employees if they're not actually coming in?
And that's an ongoing question that everyone has, and we're still waiting on further guidance from the SBA. Come June, if you're a restaurant, for example, people are not coming back. So what do you do with the money? Because your employees did not want to even come back. And so what do you do with the PPP loan? So we're waiting on further guidance. I have the full expectation that the government is going to come out with further details on if employees did not come back, then how is the business owner going to get that loan forgiven if they tried and the employee didn't come back, or if there is no business and for the employee to do. But right, the guidance today is if you had 5 employees on February 14th and you have 5 employees come June, you need to just evidence that you had those 5 and your loan is forgiven. And don't forget, you can use 25% of the loan for your other expenses. So you use the 75% for those 5 employees that you have of the loan amount, not necessarily their same salary, just of your loan amount, and then use the other 25 for rent and utilities and interest expense on other obligations. So if you have other loans, mortgage obligations, you can pay your interest with that money. And then come June, if you can evidence those 2 things, your entire loan's forgiven, even though you still have some money left in the account. So the loan's forgiven, and then you can use up the rest of the money. And you know, we talked about this a little bit earlier too, on everyone's nervous about the fine print come June, you know, if my employees didn't come back, and if I didn't use the money. Well, 2 things. You're going to get for example, you get the $50,000 loan, right? And it funds into your separate account that you keep there. And you use it for the payroll you do have, and you use it to maintain, and you use it for those expenses we just talked about. And come June, the rest of the money, leave it in there. So worst case scenario, you get forgiven for what you used, and the rest of the money you give back. There's no prepayment penalty, it's 0. Now, I have some business owners, the reality is this: some business owners are using it for their 3 employees that are there, but they are in really difficult situations and they need to use the money for other things, right? So the worst case scenario is you use it for your payroll and those expenses, but if there's absolutely something crucial that you need to use the money for, worst case scenario, if you use the money for other than what you're supposed to be using it for, the worst case scenario is you just don't get the loan forgiven. Then it's a 2-year loan at 1%. So, and then it's deferred, no payments for the first 12 months. So in year 2, at the end of year 2, that $50,000 is due at 1%. So that's worst case scenario. If the loan doesn't get forgiven because you didn't use it for the employees and you used it because there was something urgent that you needed to use the money for the business. So that's plan C. Plan C is your money's not forgiven and you didn't use it correctly, but you used it for the business. You get a 1% loan. I mean, when in history have we ever had access to a 1% loan? Anyways, right? So,
and not without severe consequences on the
right
side.
Yeah, when you think about this loan, is 0 prepay, no personal guarantees. The bank is lending the money. So really, as a business owner, I think every business that has employees and that needs to maintain operations should seek a PPP loan, and you use the money for your payroll, and whatever you don't use, you just pay it back if you don't want the money.
Stephanie, you just made reference to that personal guarantee, and in talking with funeral directors, owners in the past couple of weeks, that's come up where they've told me, oh, I applied for that once before and it was an absolute nightmare. I just don't have the time or the energy, especially now, to do all that paperwork and everything. That's been lightened up significantly, correct?
Yeah, and that's why I really was eager to get these PPP loans out to our funeral director and funeral home owners, because funeral directors have been just bombarded with this entire coronavirus, while the rest of the country and other business owners that are closed right now are home and had the time to submit their paperwork. But the program is, quite frankly, very easy to apply. It's a 2-page application. You enter 4 lines and click some boxes, and all you have to do is give us your W-3 for 2019, and your accountant probably can get you that in 3 seconds. If you don't have a W-3, then you can just show us your payroll or your ADP summary for 2019 with your number of employees and what you paid them, and then the benefits of the benefit breakdown, and a copy of your driver's license. That's how simple it is. And it should take you 10 minutes to gather that information and send it to the bank. And then we do all the heavy lifting. So they have made it very easy for business owners. And so I think for funeral directors right now, it's important to note that it's really not a difficult application process.
Great. So let me go back to some other questions here. There's kind of a 3-part question: qualified medical benefit payments. Does this only include group health insurance, or are dental and disability, long-term disability included in the company paid portions?
So the calculation is payroll costs, so whatever your W-3 is, or your 940 payroll cost, and then you can add your so that includes salaries, wages, commissions, and sick pay. And then you also add your group health insurance. So the group health insurance usually is 1 or 2 line items, so you can add that whole group health insurance. They do not differentiate, vision, regular health insurance, and dental. They just lump it into group health. And then retirement benefits can be added. And then, interestingly enough, only the state or local tax can be added. And your W-3 breaks out those boxes, usually on the top right corner there. So it's group health and state and local taxes, retirement benefits, and all the payroll expenses. That's the calculation. That is to calculate the loan amount you're going to get.
So, and there too, I think, to reemphasize what you've said several times, that there's 25% of that really can be used for anything, and nobody's going to get.
Not anything. 25% can be used for rent, utilities, and other mortgage interest.
Okay.
So those are there are only 5 allowed uses: payroll, and then the rest is rent, utilities, and other mortgage interest.
Okay. So that's the second part of this. How about workman's comp coverage? Is that part of that?
No, only group health.
Okay. Let's see. Here's a question. Do accrued expenses that have been paid out prior to the 8 weeks time period beginning, is that included? So I think what they're talking about, prepaid benefits that they experienced during that 8-week period.
You could only, I know you could only use the funds from the day you fund forward, so you can't retroact back to before you closed your loan, or funded your loan is the term. And you have to use it for the payroll of the 8 weeks, the day you get the money forward. So if it exceeds that covered period, then that would be a no.
Okay.
So if you're
1099
for September, that would be a no, right?
How about 1099 employees? Are they covered?
1099 employees are covered, and they changed this when they first launched. They said yes, then they said no, and then they said here's how. So if you pay outside contractors a 1099 and they're not on your payroll, you pay outside contractors 1099, they're the ones that need to apply for the PPP loan, not you. So they would take that 1099 and they would go on this portal of ours and fill out the application, give me their driver's license and a copy of their 1099. So they would get the loan. The loan is not in your name as the business owner. The loan is in their name as an independent contractor.
All right. And so again, good advice to share with somebody that you count on and they're wondering how they get paid. You could just turn them in your direction or your local banker if you've been able to work out an SBA loan with them.
Right. And you know, it's in the business owner's best interest for it not to be in the loan in your name for an outside contractor, because you don't want to be responsible for that outside contractor's work and use of the money, right? Because you're not able to control that spend. So it's really in the best interest of the business owner to have the outside contractor get that loan in their name. Correct.
Good. Let's see here. This may be a restatement of an earlier question, but let me just give it to you. I've incurred some additional expenses due to COVID-19, especially prep room supplies and increased removal fees. Again, this would be by outside vendors. How should I record these transactions? So that outside vendor, that may be your 1099 person.
Right,
and
so that outside vendor would go and get their own PPP loan, and they would be able to subsidize themselves with their own PPP loan.
Mm-hmm.
So you wouldn't have to pay them.
And then what was your advice for prep room supplies?
So that's the perfect example of the reality is you really need a combination of all these different products. You don't need just one. So the PPP loan is for payroll. The EIDL loan is the grant money for disaster relief. Some got it, some didn't, and it's just smaller amounts, right? And other operating expenses like these expenses, for example, that would be the perfect scenario where you need a regular SBA loan for working capital and you need an operating expenses. That would be the perfect example of someone who would need both, a PPP loan for payroll and a regular loan for working capital, operating expenses, and other business items. So that would be one solution. And the other alternative is, the reality is a lot of these business owners are using their PPP money to pay payroll and then these other expenses. So when it come time for forgiveness, only the amount used for payroll will be forgiven. The amount you use for these other items will just be a loan, a 2-year loan at 1%.
Okay. We're rolling up on the conclusion of our webinar. We were talking for everyone out there prior to this that more often than not, we will probably have a second round of this. And to what Stephanie said several times, it's ever changing. So 2 weeks from now, this could be a completely different conversation. So we'll keep everyone posted about that. We've got time for one more question, and this, again, with the background and experience that you have in acquisitions, this is probably will tap into 2 of your specialties. Should I decide to sell my business and I have one of these long-term SBA loans, how am I impacted personally, or how is that handled in the course of the sale?
Is the question if they have a regular SBA loan or a PPP loan?
SBA loan,
Okay.
Regular SBA loan.
Okay, so if you have a current regular SBA loan, keep in mind you have 6 months no payments. So it's a good time actually to start negotiating to sell your firm and get the ball rolling, because you have a little bit of opportunity here to spend some time on structuring your sale. And then the person buying your firm would have to apply for their own new SBA loan. And so you want to actually, it would maybe be a perfect time to step up your timeline, because that person getting the new SBA loan would get 6 months no payments. So it would be win-win for a buyer and seller. Sellers have an opportunity right now to sell their firm and get the price they want for their firm, and knowing that the person they're selling it to will have 6 months no payments. So it could be a really amicable transaction there, both for the seller and the buyer. And also knowing that interest rates, again, are at a 30-year low. So it's a perfect time to sell because you can get the price that you would like to get. And it's a perfect time to buy because you're buying it at an interest rate that is a 30-year low with 6 months no payments. We've never had this perfect intersection of it being win-win for a buyer and a seller.
Well, and that's excellent. We've talked to a lot of people through Johnson Consulting, and there's a little bit of that, well, I don't want to feel like I gave up. And if it wasn't, take COVID out of the equation and you were given these exact same circumstances, you'd jump all over them. So I'm glad you said it that way, that no one should look at it as anything but a really good opportunity. If you have that in your mind, it's certainly something that you want to think real long and hard about it while this is still available to you. Well, Stephanie, I can't begin to thank you enough. Like I began at the start, you bring a rare combination of skill sets and experience that I can't imagine anybody else out there that we could have had visit with us about this. So thank you very, very much. Claire, I'm going to turn it back to you.
Awesome. Thank you, Stephanie. And thank you, Nelson. Thanks, everybody, for tuning in. We really appreciate it. Look out for a webinar recording in your inbox, probably Monday, maybe Tuesday. Hopefully we'll have it to you by Monday, though. We will also be giving you a little bit more information regarding an FAQ on what we talked about today. So be on the lookout for that as well. You will also be able to see a link to schedule a free consultation with a BCS team member from Johnson Consulting. So yeah, we appreciate you guys being here today. Thank you, Nelson. Thank you, Stephanie. And that's all we have. Yeah.
Thank you very much. Be safe, everyone.
Yep, have a good one.
Thank you.